Hello, hi, and welcome to the market update from 17th to 21st of February 2025. Let's start with the world economy. The Australian Reserve Bank had cut the cash rate by quarter point to 4.1%. The first reduction had happened since November 2020. In UK, the inflation for the 10 month came at a 10-month high. The CPI rose by 3% in the month of January, up from the 2.5 in the month of December. Largely, this was due to the airfares, food costs, and private school fees, which was increased by the Labour government's decision to impose sale taxes. The US 10-year Treasury bond yield is currently trading at 4.43%, which was last week also somewhere about 4.46%. So largely stable at that percentage point. The that is the range of 4.5, closer to 4.5%. The US 10-year Treasury, US dollar index was largely flat in the last week. It closed at 106.641. Last week also it was somewhere about this. On the gold front, 24 karat gold is now at 86,018 per 10 grams, up by 1.54% from the last week price of 85,000, something about 85,000. Now we look at the how the markets were placed. The U.S. market in the last week corrected a bit after the market has started to factor in the all the trade wars and everything, and the sanctions that are being imposed are being thought of as a tactical move rather than just being imposed on everyone, where the all the tariffs have been, as of now, have been postponed. The European market was flattish. In the Asian market, we could see that uh, the Gift Nifty was positive. The Nikkei was negative, but kind of flattish, not negative. Whereas the Shanghai market, after their leaders imposed confidence into the private sector and on the entrepreneurs, gave up a positive push, and it was up in the last week. The FIS for the Indian market in this week sold close to 7,793.27 crore worth of equity, whereas DIS bought 16,581 crore worth of equities. For the month of February, if we see that the FIS had sold close to 36,976.7 crore worth of Indian equity, whereas DIIS had bought 42,601.02 crore worth of equities in the. Now moving on to how the Indian markets have performed, led by the FIS selling the larger index, the Sensex was down by 8.8%. Nifty Bank was down by 0.2%. Whereas the strong DII buy had moved the mid cap and the small cap index in the positive zone for the week, where they were up by 1.6% to 1.49% respectively. If we look at the PE valuation now, the Nifty 50 PE has reached 20.3, which is below 2 years average and 5 years average. Nifty 150 PE is at 35.2, above 2.5, 2 and 5 years average. Nifty Midcap 150 PE, trailing PE is at 35.2, which is above 2.5 years average, 2 and 5 years average. Nifty Small Cap 100 trailing PE is at 26.8, just above 2 years and below 5 years average. The Buffet indicator showed that the Indian market is currently modestly overvalued, with the value of 113.17%. In the Indian bond market, the 10-year government bond yield was at 6.7%, same as in the last week. The yield curves in the short, medium, and long term are flattish. There's nothing